that we will deliver Patriot systems to the Ukraine for the air defense. And in many other fields that are very important, we are doing the necessary stuff. And shortly before our debates, we decided together with the United States that we will do something with special tanks, the Bradley from the United States, the Marder from Germany. And one message is above all, we always act together with our allies and friends. We are never going alone, because this is necessary in a very difficult situation like this. And I'm very much thinking that it is necessary that we are cooperating in this way, and this is why I'm not announcing things which a lot of people are doing. I'm just always thinking about the situation, I'm discussing with the friends, and I'm taking the necessary decisions when there is a reason for doing so. And one of the aims we are having in all the support we are giving is that we support the Ukraine as long as it is necessary with all the means we can use, but also always avoiding that this war is escalating to a war not between Russia, which is the imperialistic aggressor, and Ukraine, who has all the reason for defending its own integrity and it is good for us that we are supporting them, but to avoid that this is going to be a war between Russia and the North Atlantic Treaty Organization.
So if the Americans and the other Europeans said yes to Leopard tanks, you would let them go, presumably, and you would let your ally, people like Poland, re-export them, but only once you have agreed that together?
I think it will be something which is going as it is the right way it should go. It is that we are discussing with our friends, with our allies, with the United States, what is the right thing to do. And it is nothing for public debate. I think it's something where we have to work on. And so far, we did a lot, as all are realizing. And what we are doing is on the forefront of support of Ukraine. And let's be this the basis for the decisions that we will have to take in the next weeks and months, because this will be a long war.
There's one area where Ukraine, you are subject to Ukraine. You've said that as regards peace talks, that is up to President Zelensky. Zelensky has made very clear, done even an interview with me, he said that his view is that Ukraine should include Crimea, and that's his starting point for peace talks. We both know that's an incredibly difficult thing for the Russians, incredibly difficult thing maybe even for the West. Do you worry that that might be a recipe for a war without end?
I'm very happy that the Ukrainian president is ready for peace. And we stated this very often when we were sitting together as G7 in the last year. We stated this very often in many other meetings. And now it is on Russia to take a step, because they cannot continue with their aggression, and they have to go back, they have to withdraw troops. And this is something which we are waiting for.
Withdrawing from the Ukraine, as you know, is a much more difficult thing. So it's to say he's ready for peace, if he's still waiting for that level, is a harder thing.
I think it is necessary that we understand the situation correctly, and this is now that Russia has to do something which they are, as far as we see, not willing to do yet. And this is withdrawing troops. We are waiting for that.
Can I ask you about another place, China? As I said to you before, I read your essay on foreign affairs, where you said that when you came in, there was no plan B. Germany was very reliant on energy from Russia, and you had to try and work out. Your predecessor, Angela Merkel's reputation has suffered because of that. I wondered whether in your case you might run the same risk with China. Germany is the place which is most exposed to the Chinese economy out of the big Western economies. You've led a trade delegation there. America is taking a much tougher approach towards China. Do you have a plan to gradually remove China from being so important to the German economy?
Just one sentence on the situation of gas supply and all the fossil resources we use today. We are going out of using them. So in 22 years, Germany will be the big industrial nation that is economically successful without damaging the environment, and will be climate friendly, CO2 neutral. And the industry is investing billions to do this, and we are also doing this in increasing the capacity of renewables, of wind, of solar to be used, and increasing the capacity of our grid. Looking to China, I think the right answer is Germany is exposed to the rest of the world. We are much in favor of globalization. We don't believe that it is a right idea to follow the concept of deglobalization or something which is similar to that. So we have to cooperate with many partners. And the right thing to do now is that we all together, and also the business sector in all our countries, are willing to have not just one supplier, to look for others, for going to many regions in the world. And I think there is a big mistake on the further.
You have less China, though.
There is a big mistake in looking to the world. The rise of Asia is not just happening in China. It's happened long ago in South Korea. It happened long ago in Japan. They are very strong nations. It happens in Vietnam. It happens in Indonesia. It happens in Malaysia. It happens in India and some other nations to be named. And if we look to the rest of the world, to Africa, to the South of America, there will be strong nations. So I really believe what we will see is a multipolar world with many strong nations on the world. And it is necessary to have a supply chain that is not just linked to one region, to one country, and this is what we are doing now. And this will make it as strong for the future, because if there is a difficulty with one nation, with one region, we can look for the others, which we are already well connected with.
You just mentioned deglobalization as a worry. Most of us, if we look now, we would see what Joe Biden is doing in America. He is taking Trumpism and adding this massive Buy America bit. Your Vice Chancellor, Robert Habeck, last week talked about a trade war between America and Europe because of all that fact that he is concentrating just on American jobs. Do you think that is a realistic fear, that we're heading towards a trade war between America and the European Union?
I'm sure it will not happen. We are working very hard to avoid a situation like this. And yes, we are very much appreciating what is the basis of the decisions of President Biden and the Congress, saying that they are willing to invest into a better future, which is more looking for environment, developing climate-friendly industries, which I very much support. And the right question is how to deal with your friends in the world, and especially if you are a nation that was fighting so long for free trade, which we do. And which the United States did also. So
but it doesn't now.
So we are now discussing with the government and with all the political people in the United States that it should not happen, that local content regulations are against European partners. And I'm quite optimistic that we will reach an agreement in this field. And we are working for that. And yes, we are also doing a lot for developing our industries, and we will do so. So, as I already said, we will invest billions in developing renewable energies in our country, and developing the grid, in developing hydrogen. And Germany, as a growing nation, is very much willing to do this. What is necessary, we are open to people from abroad working in our country, and you saw in the past that this happened, and it will continue to happen. We will be the nation that is willing, and Europe also will do, that is willing to look for renewable energies as electricity supply, and to electrify industries and mobility, for instance. And we are looking for developing hydrogen as the necessary gas for the future.
But those are all being pushed down jobs, local jobs for local places. Do you worry that Joe Biden in some ways is worse from a trade war than Donald Trump? Joe Biden's much closer to the unions. It's him who's come forward with all these Buy American provisions, which Donald Trump didn't.
So I'm a labor lawyer by profession, and I'm very close to the trade unions, and I'm very much looking to developing the industrial perspective for Germany. We are the fourth biggest industrial nation in the world. We are quite economically successful, and we want to continue the strength of our economy and being an industrial country. And so there is a need for cooperation, and I'm still in favor of the idea of globalization, creating wealth all over the world, which I think we should look for.
Last week, your party floated the idea of more joint EU financing to help Europe's green tech industry, compete with the Americans. Would you be prepared to endorse that idea? Do you think that's something you could take to the European Union and say we should do that together?
You know that I was one of the architects of the European Recovery Plan,
yes,
which worked so successfully fighting against the COVID-19 pandemic. But most of the money that is in this plan for investing into the future is still not invested. So we have a broad basis for activity.
Yeah, but it's quite interesting. You also said back then that this was a Hamiltonian moment, referring to Hamilton, who came up with the idea of a fiscal union in America, put very simply. It does feel as if Europe is gradually heading towards something where maybe Germany is prepared to see joint borrowing, as long as the money isn't then given away, that it's stuff that is then borrowed, then lent to individual countries. Is that where you are? That seems to be where you're heading. How Hamiltonian do you feel now?
I still feel Hamiltonian, but I was very clear what I thought it should be looking at Europe and the reality of the 21st century, which is not just the same.
Yeah.
So the task is that we are acting together, and yes, for fighting against COVID-19 pandemic, we decided to have a chance for taking sovereign for common
borrowing to support
in this field, which was decided and is the reality now, but it was just restricted to this one moment. The Hamiltonian moment in this case, a bit different to the historic situation of the United States, is that we also decided to pay back together. And,
yes,
and this is something where still some decisions have to be taken, but this creates the situation where we are coordinating our activities. And yes, this is, I think, the message that was sent out in this crisis, that we told all the markets that we will stick together. But now we have done this. We have a lot of money that is still there to be used.
Use that money.
There is a good chance to use this money.
I wonder what you thought of relations with Britain at the moment. Again, you come to Europe, the European Union from Britain at the moment. You get stuck in a long queue with other people who have nothing to do with the European Union, whilst by contrast, people in the European Union arrive in Heathrow and walk through. When do you think it will be time to stop punishing Britain for Brexit? I know that is a strong theme of the French, who you're going to go and see this weekend, but Germany has generally been more kind of grown up about those things. Where do you stand on that?
I don't think that there should be any punishment, and I always opposed any idea like this. We want to cooperate with the United Kingdom. I'm still sad about the decision of the British people that they left the European Union, but it is their decision and they took it, and we will now be partners. And there are a lot of agreements we already have, for instance, in the question of the situation in Northern Ireland. And I think if all stick to the agreements we have, this will be a very good cooperation.
About Europe itself, I thought about your idea of Zeitenwende, and I talked to various people. A couple of people pointed out that from a European perspective, the Ukraine war, which I agree you did nothing to help to bring into being, in the long term that will increase Germany's sway over Europe. If someone is going to rebuild Ukraine, it's likely to be Germany. And already Europe has been dragged to the east. If you're looking at the view from Madrid or Paris, Berlin feels closer to the centre. Is that something that you think is happening too?
I'm not taking this perspective. Yes, I very much support the idea of a stronger, sovereign, geopolitical European Union. My view and perspective is there will be, in the midst of the century, a world of 10 billion people. And the European Union will be between 400 and 500 million And if the things are running well, a lot of nations are coming up with 250, with 500 million inhabitants, even some with more than 1 billion. And for cooperating in this multipolar world, we must be united as the European Union. And so Germany takes its responsibility in supporting the idea of a better cooperation and modernizing decision-making processes in the European Union so that we are ready for enlargement, looking at the Balkan states that are not in the Union but should be members of the Union, looking at Moldova, looking at Ukraine, looking at Georgia, which also got a perspective.
And it strikes me just throughout this interview, you have continually pled the cause of globalization, of cooperation. Do you find that quite a lonely place at the moment? You look at I talked about America first in America. You've had these different nationalisms going in. Do you worry that this is a song that you are pretty much alone in singing?
No, this would not work, but I think the benefits of globalization are very obvious. Many people in the world profited from the development of the last 30, 40 years, and they should continue to profit from this. And we should make it a better place if we find a way, not just having a multipolar world, but a multilateral one where we also cooperate and working together. And yes, we have to learn our lessons from this war and from a lot of other big problems that we are facing. And this is that we should differentiate our supply chains, that we should not go for one country alone, that we should look for many different countries, that we should understand the ideas and the problems and the perspectives of those countries who want to deliver a better future for their people. Let's just mention Indonesia, a big nation of 250 million people, a democratic nation, which was last year presiding G20, and looking at India, which is G20 president this year. I think it is necessary to understand they are partners on eye level, that we are working together with them. And if we have this perspective, I think globalization has a good chance.
One last thing on that. Do you see the possibility for a union of democracies at different times, having just been in Asia last year, countries like Indonesia, countries like India, when they look at places like Germany, they wish that America was reaching out with more plans to bring them into economic unions and things like that?
I think that democracies should cooperate and that they should understand that there is something they have in common. The rule of law, the respect for the individual rights of men, and also to be not revisionists in foreign policy matters, that they don't want to be aggressive against their neighbors. And I think this is what we should understand. So we have to act together with a lot of countries and states in the world which are not there. But we have also to understand that there is something we have in common and that we are similar in a way, being Democrats, being democratic, being in favor of the rule of law.
Chancellor Scholz, we began with optimism about the German economy. It seems fair to end with optimism about global international relations. We will all hope you are right about that. Thank you very much for talking to Bloomberg.
The German Chancellor Olaf Scholz speaking exclusively with Bloomberg's editor-in-chief John Micklethwait in Berlin. The Chancellor will now journey the 800 or so kilometres south-southeast to Davos, and he will be the only G7 leader to attend the World Economic Forum this year. But so fantastic to get that conversation with the German Chancellor in Berlin. European stocks have settled. We are kind of done with the day. A positive session for the DAX, appropriately today, up by 0.3%. The German Chancellor saying he sees no recession this year in Germany. He also sees no trade war with the United States. The FTSE 100 languishing a little bit, but the CAC 40, the outperformer today, up by around 0.5%. As the Chancellor starts his journey to the World Economic Forum in Davos, we can accelerate that process for you right here, right now. Let's take you back to Davos. We rejoin Balance of Power anchor David Weston, sitting down to have a conversation with the former White House economic advisor, Gary Cohn. David.
Thank you so much. Really great to have you, Greg. So thank you, Gary, for being here. I really appreciate it. As we've just heard from the Chancellor, Scholz, he does not expect, in fact, he's quite confident there will not be a recession in Germany this year. Do you have that same confidence?
Well, thanks for having me. You know, I do agree with them. I thought that the risk to Germany was really the energy situation going into the winter, to the extent that we had a very cold winter and they had to start rationing energy and they had to cut back industrial Germany to keep people warm. I felt that that was a really tough situation potentially. We're now deep enough into the winter and we sort of know where we are. We know what's in reserve and storage. I think Germany's going to get through the winter fairly easily with energy, and I think they're going to continue to power through this. So I'm in agreement with the Chancellor.
Biggest economy in Europe. What does that say about Europe in general? No recession in Europe?
Well, I think Europe's going to muddle through this. The UK, not as clear. But it's not going to be easy. You know, we've still got pretty high inflation in Europe. It's a difficult situation. You know, in the United States, when we raise interest rates, we can all handle it. The interest rate picture in Europe that Lagarde has to deal with is a little bit different. You know, Germany can handle higher interest rates. As you start raising interest rates, Southern Europe has a lot more difficulty with the reality of what's going on.
You were director of the National Economic Council, so you followed the U.S. economy pretty closely. What about the United States? What are the chances of recession? I talked earlier today with Jane Fraser, who said she thinks second half it's quite possible.
You know, it's interesting. We've been around Davos, and everyone here is negative. So first of all, that tells me we should be positive. But you know, I was at a dinner last night with a lot of CEOs, global CEOs, and you know, most of them raised their hand that they were pretty negative about the economy. Then when they talked about their business, they were all pretty positive about their business. So I think everyone thinks everyone else has a problem. My opinion is I'm pretty optimistic. That doesn't mean we're having a bullish economy. What I'm optimistic about is I think we can muddle through where we are. I think the Fed's getting to the end of their tightening cycle. We may have a couple more 25 basis point increases from the Fed. We top out around 5% in Fed funds here. But I think we've all factored that into the situation, and I feel like we're in a relatively good situation. The consumer is okay. They're not great. We're starting to see a few cracks. The economy is slowing down, but I think we're going to muddle through.
You think the Biden administration is getting it about right now in economic policy? In the past, you've been critical of some of the fiscal stimulus. You thought it was too much.
No, I was critical. I thought that the first big, $1.9 trillion stimulus package, it was unnecessary. You know, the economy was turning. We were putting people back to work. There was enormous demand for labor. We had come out of this goods economy, and we turned back to our normal comfort zone, which is a service economy, and people in the service industry couldn't hire, and we were still giving out stimulus. It didn't make a lot of sense to me.
Gary, you've gone from being a financial executive, being a tech executive now. You're vice chair of IBM. Give us a little insight into where tech is heading, particularly in computing. We hear a lot about quantum computing. We hear about open AI and ChatGPT. Where are we going in terms of artificial intelligence?
So look, the whole machine learning, artificial intelligence industry, it's really interesting because it affects industries at sort of almost all ends of the spectrum. You know, when you're out hiring people, and we've all lived through a labor shortage, as I was talking about, we've been unable to hire people. We've got record low unemployment in the United States. So, you know, AI and machine learning has been used to fill that void. So in the bottom end of the spectrum, where it's been almost impossible to hire people, we see companies using machine learning to replace people that they can't hire. So a typical example of that is you pull up to a McDonald's drive-in today, you're probably ordering from a machine. It's not a human being. You're ordering your Big Mac and your French fries and your milkshake from a machine. Not because the McDonald's wants a machine, it's because they can't hire people to do it, and it's very efficient to go to the machine. You take the other end of the spectrum, we're using machine learning or using automation to really enhance the skills of people higher up in the spectrum. So you take someone that runs your cybersecurity business, they've now got machine learning sitting right next to them, they've got artificial intelligence, and they become much more effective at running the whole cybersecurity operation of your organization by having that analytic tool next to them.
And a related topic, and IBM has now come up with some policies on this. What about the environment?
So environment,
ESG has been very, very big. Climate's a very big issue. How can tech help us?
So environment's really important. And as a technology company, we think about how we can help our clients. And we look at climate no different than any other sort of business operation. First of all, it's a data problem. It's a big data problem. So you have to collect the data and you have to get it into a usable format. That's something that IBM really thrives on, is we help people collect data, we help getting it into a usable format. Once you have the data, you need the technology, you need the software, you need the analytic tools to start evaluating the data. So you've now got a baseline, you're evaluating your data. You know how much carbon you're emitting. Now, once you know how much carbon you're emitting, you can go through policies and procedures to change the way you're running your business, how you're running your business, and you can measure success. So you operationalize it, and you become much more efficient at running your business once you have the technology and once you have the data in a way that's useful to you as a company.
So is IBM working specifically in the climate area in ways to use data in the way you just described?
We're working in all areas on data. Data is really important to us. Machine learning is really important to us. But the environmental area is one area where our clients are starting to spend more and more time because they're going to have, they're going to have regulatory requirements. They're going to have reporting to allow their regulatory agencies, and they're underinvested in this area. So it's an area with a lot of opportunity.
You were a leader of Goldman Sachs for many years, and you're not there anymore, as far as I can tell. At the same time, there's a lot of talk about layoffs or at least cutbacks in workforce on Wall Street in general. What do you make of that from a distance? I understand you're not there, but is this out of the ordinary?
You know, Dave, we're seeing it across many industries. We've seen it in the technology industry. We've seen it in many different industries. It's typically part of the business cycle. You know, that people get laid. You know, people tend to get laid off as the economy contracts. We saw a lot of businesses expand over the last year and a half as we came out of COVID. People were really understaffed, and people grew their businesses accordingly as the economy was growing. And people are just always trying to right size.
At the same time, a lot of people who are losing their jobs right now are finding ones right away because there's a shortage, as you said. There's a shortage of unskilled, certainly, a huge shortage of unskilled, but even in skilled positions. Why don't we just let more people into the country?
You know, that's a great question. You know, we've got people coming in the country. We've got people coming in the country illegally. The question to me is even more basic than that. Why aren't we giving them the ability to work?
Fascinating. And what about productivity? Because if you're going to grow the economy, as I understand it, economists say, you got to have more people and or more productivity.
Yeah.
Can you drive productivity?
Look, I think we can drive productivity. You know, we at IBM talk about this. You know, the new age of computing is going to be quantum computing. Quantum computing is going to be very important. It's going to be very important to the environment. We're working on things in quantum that can help the environment. It's going to be something that we think can drive productivity as we can solve bigger and bigger equations and we can solve bigger problems. But it's all about productivity. You're right. It's not just putting people to work. It's making people more productive, getting more work out of the same people.
You've been in the private sector, obviously, in very senior positions. You've been in the public sector, very senior positions. As you look out into 2023 and beyond, maybe as important, what do you think the biggest challenges are?
You know, look, we've got to figure out where we are economically. You know, we've gone through this sort of unprecedented period. We went through a zero interest rate policy, which I don't think made sense at the time. We went through a huge amount of quantitative easing. We're now going through a sort of unprecedented interest rate tightening cycle. We're going through quantitative tightening. We've got to see where things naturally settle into a more normalized economic picture. And I think we will get there. You know, I don't think the Fed should be using their balance sheet as aggressive as they have been. I'd like to see the Fed get out of the balance sheet business. I'd like to see all the central banks get out of the balance sheet business. And we're going to have to understand what the normal growth trajectories look like. You know, we've been through unprecedented economic cycles at both ends of the spectrum, literally in the last, 5-6 years here.
Gary, thank you so much for being here. Really appreciate it. It's Gary Cohn. He's now vice chair of IBM. And back to you, Alex.
All right, David, thanks so much. Really appreciate the interview. Thanks for your patience as well. All right, let's go to the day ahead. So there's a lot happening in the next 24 hours, particularly over in Europe. You get the Bank of Decision meeting. That's going to come this evening. How markets are positioned going to be key. Plus then tomorrow you got Richemont and Burberry. So you're going to get the next read on retail. Plus you get UK CPI and Eurozone final CPI. What is actually at this point priced into the market? Joining us now, State Street senior multi-asset strategist Maria Waitman. Maria, I want to start with luxury for a moment because the luxury index within Europe is up for 5 straight days. We haven't seen that since November of 2021. It's at the highest level since January of 2022. Is good news already baked into these luxury retail names?
Yeah, hello. I think a lot of kind of uplift for luxury sector comes from this idea of China reopening and Chinese consumer spending a lot of money once the kind of zero COVID policy has ended. So I suspect there would be quite a lot of positivity going forward for luxury sector. In terms of results, again, I mean, we suspect that results will be quite strong in Q4 because economy still has not tanked as much as we talk about kind of future expectations. So current state of economy is okay. China is reopening. So yeah, future is bright, I would say, for luxury sector.
What about for Europe, Maria? We're seeing European equities significantly since the start of the year outperforming US equities. The Bank of America Fund Managers Survey talking about a collapse in positioning in US equities. Has the market got that trade the wrong way around, or are we right?
I mean, future will tell. I'm a little bit skeptical about Europe outperformance. So a lot of expectation about for European equity, or optimism of European equity comes from this idea that the energy crisis is not going to happen. I mean, that's great, fantastic. And I mean, I slightly worried that weather is turning, but okay, so maybe energy crisis is not happening, but we still have very high inflation. We have low consumer confidence. We worry about whether it's possible or not to create soft landing or hard landing later on in the US, which will affect Europe more than any other region, given it's very, very industrial. So I guess there are some positivity and we're getting better data, but I think we're definitely not out of trouble for Europe. So, and what we do have in Europe is very high earnings expectations. So that's a challenge for me.
So, okay, so that's a challenge because they could wind up coming down. So, Maria, that raises the question then. There is still a significant cash pile, as the fund manager survey showed, but it is getting drawn down. If you don't want to be investing in Europe because there's too much good news priced in, then I guess, like, where do you go? Is Europe the cleanest shirt in a dirty laundry? Like, where do you sit?
I mean, to be honest, if I had a pile of money, I would probably go into bonds other than stocks. I mean, stocks for me look a lot more challenging with kind of upcoming earnings recession. But if we're looking within equities, I think it's about relative trades, looking for areas where earnings are less likely to disappoint. So, I mean, controversially, so earnings expectation in US have come down a lot. So maybe the bar is lower there and companies have a better chance of beating those expectations. While in Europe, you have a lot of expectations to reckon with.
Yeah. Maria, Europe feels like it's trading early cycle, not late cycle. It doesn't feel like we're going into recession. It doesn't feel like we're pricing late cycle.
Absolutely, 100% agree with you. And actually in Europe, what you see is... Oh, go ahead.
So how do you explain that? Can you just kind of continue the thought? Sorry.
Yeah, no, absolutely. I mean, in Europe, actually, I mean, ironically, the place where you see the biggest earnings upgrades are financials. And that's, I mean, kind of goes ahead or goes in line with this idea of higher interest rates and helping banks. But if we are going into recession, first of all, maybe interest rates won't go as high. And we heard from ECB today that maybe it's not getting, we're not going to get that many hikes. And secondly, I mean, quality of loan books will deteriorate, loan demand will deteriorate. So, I mean, to me, there is a very, very, very significant inconsistency, as you point out there.
So, Maria, based on that, when you talk about owning bonds, how do you own bonds in an environment where we talk about being late cycle with the recession fears, but we're investing as if we're early cycle? How do you position bonds then in that environment?
So I think that's really the crux of argument, is that I think equity markets are trading like we're going to get soft landing, and I think bond markets, to my mind, a little bit more realistic, and they're really pricing kind of higher chances of recession.
Maria, what do you see happening in the credit market, particularly the high yield market? What I'm looking at the moment is an environment where we seem to be getting a dislocation between what credit is signaling and what particularly the PMI data out of Europe is signaling. And I'm wondering which of those two things you think has to change.
I mean, what is interesting, and I mean, I was looking on Bloomberg this morning at surprise indices, and surprise indices are negative in US in surveys and in labor market. Every other part of the index is actually seeing positive numbers. So that tells me that current state of the economy is not as weak as we see in PMIs. Mm-hmm. Yes, we'll probably get some rollover, but before that, we do need to have very tight financial conditions for some time. So current state of economy is not that bad. We're not seeing bankruptcies. We are not seeing, so there may be some opportunities in the short term, but later on that would be a challenge.
Maria, before we let you go, the other big event is the BOJ this evening. What's the trade into it? What's the trade out of it?
That's $1 million question. I think you can very plausibly to kind of advocate pretty much any scenario, whether they abandon yield curve control, whether they hike now, whether they don't. So I think I'll have to pass on that.
No, fair enough. All right, fair enough. And what they're expecting and how they're pricing it really different. Maria, thanks a lot. We really appreciate your time today, Maria Waitman of State Street, for joining us. And Guy, to that point, economists are actually looking for no change tonight, but that doesn't feel like that's the market's actually trading for.
Well, the market's pushing. The market's almost trying to create the weather here, isn't it? It's trying to test the BOJ to see how far it can push it. And I think that's the kind of the challenge that Kuroda faces right now. Is he going to push back on the market and say we're still in control of this process, or is he going to acknowledge that we're coming to the end of yield curve control, and as a result of which maybe you sort of feather out of it rather than leaving it to his successor, maybe to sort of pull big levers and make a significant exit from it? It's going to be fast. The commentary around all of this, I think, Alex, is going to be really fascinating overnight. This has the potential to be the big bang of this week.
Yes. What happens if you do get a surprise yield curve increase to 75 basis points? What if yield curve control is talked about being abandoned, altogether? What's the knock-on effect to U.S. Treasuries? How much money then is repatriated into Japan and taken out of Treasuries? I mean, all of this kind of bubbling under the surface as well. And then, of course, we're going to have a lot more macro themes coming out of Davos. I do think that the potential trade war situation between Europe and the U.S. It might be the conversation for this year.
Absolutely. We'll see how Europe responds. Then maybe we'll get a sense of how combative this could ultimately be. But certainly the noises coming out of the French indicate that we are certainly heading in that direction. Olaf Scholz, the German Chancellor, in conversation with John Micklethwait, maybe just trying to reduce the temperature a little bit.